we do a lot of private deals, private equity and private debt as well. I think private credit side is growing exponentially last 5 years. Banks have been sort of pulling out of that space because of the capital requirements. And I do see a lot of opportunities emerging in that space. Now, one thing with the private debt side, it becomes, it's more knowledge intensive because you need to go through the due diligence, the legal structuring to be able to be comfortable with. So I think that takes a bit of building up the knowledge base, depending on which stage a firm might be in. And I think in exploring opportunities like that, it's always good to team up with others that are looking for partners in that space. I do think it's less volatile, and in frontiers market and emerging markets, due to two things. One is there is no liquidity in that market. Well, emerging markets, you do have some liquidity. Frontier markets, that comes down, but private credit is essentially an illiquid market. So you see less volatility there for two reasons. One is because it's illiquid, a market price does not form. So it's more on perception. But a real reason for the lack of volatility is you don't see fire sales. You're not subject to fire sales. In highly liquid markets, event triggers, cause big losses, whereas private markets, especially if you're the longer term investor, I think you're more immune to that. So that's the upside, I think.